Hi everybody, and welcome to this new episode on which I do provide proofs of my approach to Forex analysis. Today in a day trading example, day trading hedging example, and we are in a particular situation today because it's the 2nd of March, so we are at the beginning of the month, and by experience I can tell you that every beginning of something, that may be the day, the week, or the month, or the year as well, the approach must be very careful as well in other situations, like for example on the Friday, which today is Friday. If we decide to open trades after having analyzed the markets. Let's go directly to the platform and let's see what is going on. I already took some trades, I placed it. Let me show you in the first statement that I produced it. I doubled my orders with positions that were taken in this case and that are running the same, taken at the very beginning of the day. So it's an 18 hours trading, okay? So into the day, started very early this morning, 1 hour after midnight at 0:54 and 1 o'clock, okay? And I decided to trade CAD yen, Euro CAD, Euro USD, and USD yen. Of course, CAD yen and USD yen in sell, and Euro CAD and Euro USD in buy. As usual, I created a demo account for example purposes along with my live trading account, but that's another story. So here I can show you very clean and contextualized to this example the methodology that I am used to adopt for reading the markets. And of course I send you back also to my previous videos to have further informations and even more examples, because every week the Forex scenario is changing. There can be situations on which you get a very long-term horizon of trading, but normally my approach is regarding the maximum the week, which anyway can provide enough points or pips to be traded, okay, and to take profit. So why I choose these currency pairs? So as usual, I do analyze the market performance in terms of weeks, the weakness, strength, and overbought, oversold condition of the 8 major currencies that provides the 28 major currency pairs that almost every broker nowadays can provide to the operators for Forex trading. Let me show you what the scenario was at the very beginning, because actually there is occurring a retracement, and maybe I can analyze further the markets and decide to keep this position open, but I will close them as usual for the final report, and even because it's Friday. And in my approach, no matter what, the 95% of cases, when it's Friday, it's time to close and take the profits and take them out from the market. There can be unexpected retracements at the beginning of the the next week that we may not know, maybe because of fundamental reasons. And anyway, if we behaved well in our trade along the week, it's more sufficient to get these results, and at the same time keeps ourselves flexible in making trades every with kind of cycling and constance, and not just from time to time. So it's a way to keep ourselves flexible and in movement, like the market is. The market is always changing. Every day we can find different scenarios that can provide more opportunities. Sometimes we do enter not at the proper level, and we risk to we go towards the risk of being into a ranging situation, whatever. So we have always to understand that the moment we put our money into the market, there's also has to be a moment on which we take our money out. And so this is my approach, and I'm not saying that has to be the only one. It's very subjective, the trading, and so I do respect also other approaches, no problem, but this is mine. Okay, let's just magnify for a while the situation of the monthly scenario. Okay, this is one of the rare cases on which I trade euro dollar, but that was euro and dollar were the two currencies that were suggested at the very beginning of the day, strong and weak, to project at least with other two currencies and to hedge. And this is a quite very nice and clean example of hedging with four currencies. So let me show you that at this time of the day, so at 1 o'clock in the morning, 1 o'clock a.m., euro was very strong and is still very strong. Okay, so we have a plus sign here. Let me just use my pen. And okay, let me also do this, because of course I think you can see it anyway. Yeah, right. So we have the monthly chart here, even because then we make some considerations on the lower time frames, which is quite nice to do. Okay, so we see that euro is quite positive. Okay, and another currency that is very strong and overbought is yen. Okay, then we have, at least in the monthly, USD weak, and also CAD very weak. You may notice, and this is also for the purposes of showing you some kind of scenario that can persist in the next week, New Zealand dollar started to become weaker than US dollar, which is still weak on a monthly analysis, but started to become strong on the weekly basis and also in the daily basis, while New Zealand dollar has confirmed in the weekly and in the daily some kind of progressive weakness. But as I injected the trades this morning and I let the market go, now is 18 hours trading exactly, I decided to use this strategy and not to pick up other trades, because this is a proper hedging, a proper combination. Okay, so this retracing in towards a kind of strength situation of the dollar, both in the weekly and in the daily basis, suggests me that there can be a retracement. And we have to keep in mind, as usual, that today is Friday. So, as I said, I'm about also to close the trades no matter what, because it's Friday and I don't want to leave my my money, even if I could do more. You know, it's like some traders, they use the ratio of 1 and 2 no matter what, and maybe they can do 4 or 5, but they stay strict to a discipline, and this is my discipline. Okay, so let's grab probably this way, so there is some space on which we can write down some things. Okay, so if we do have to analyze the weakest and the strongest currencies. On the weak side, we got USD and CAD, and as strong currencies, we got Euro and Yen. Bear in mind that I'm not considering at this moment any currency pair. I'm just considering single currencies. Okay, and what comes out from my calculations is an overall analysis that involves all the 28 currency pairs, suggesting me values for each one of them. Okay, but what is logical is that you trade something weak and overbought with against something strong and oversold. Okay, so in this scenario, of course, Euro and USD, which provides this pair, should have been in buy. Okay, and also Euro against CAD, as Euro is base and CAD is quote. Should have been in buy. On the other hand, CAD Yen, sorry, today I'm not writing very well, huh? Okay, CAD Yen, is for the sell, and also USD Yen is in the sell analysis. If you watch one of the webinars that I was making in regards to hedging and to identify an hypothetical square on which we have 4 currencies, then we can combine for hedging, you will see the logic of this choice. And I strongly suggest you to go in my channel or maybe in the playlist, whatever you prefer, and take a look to this webinar on hedging. Because what you see here is exactly one of the examples that we may find there. Explain it with some more theory. There are sometimes scenarios on which this kind of setup is not possible, and we have to choose maybe just 2 currencies or 3, because these values are not very significant, and or they are quite uncertain, or that they suggest more a ranging phase. So in that sense, or maybe we can do this kind of example as well, but when we go and open the charts, we see that the move has already happened. So in that case, we have to expect that we are not taking the trade on a very convenient level. Okay, as usual, I show you I'm not using stop loss. So, and that was proper because the trades I injected them at the very beginning of the day, so expecting some kind of oscillation, and I will show you in a while the 4 charts, so you will also see that. So what we see here, I can also fix it for good purposes. So we have Euro, USD, and Yen plus, and CAD minus. If I go in the weekly, we see that dollar USD is now positive, so it's not anymore negative, and New Zealand dollar and Aussie became very negative, and also the pound. Okay, CAD and Yen, they are still maintaining this situation. This is the weekly, but we are at the end of the week. And also in the daily, CAD is negative, Japanese yen is positive, and anyway, euro is stronger than dollar. GBP is having little movements in positive, and also Aussie is a bit negative, and New Zealand dollar is still very weak. But these values occurred in the middle of the day. Okay, let's take a look for a second also before closing the orders. Let's take a look at the trades. And I will do also today another situation, an example. Okay, we are using a hourly chart. Let's do this way because it was all at the beginning of the day, so we need the day to understand. Okay. Okay, so let's fix this. So this was the moment of the day. Oh my God, I cannot do it very well today, huh? With the and I like to be precise anyway. Okay, so in this area I went short on CAD yen, and look, I got a retracement. What if I would have took and put some stop loss? I would have been take out, because then I went to sleep. Okay. For as regard Euro CAD, this was the same situation. I was a bit early. Okay. Then we go on a USD yen. And then let's go to the euro dollar, which is the same moment here, that had retracements here. Despite the initial drawdown of a situation, and I have to tell you that with my real account I started trading the day before, some hours at the end of the night, at the beginning of the night of the night before, but this is because this is made for example purposes. So I waited the beginning of the day, I created the demo account, and then I waited for the confirmation, not of a price level in this case, but the confirmation of the values. Even for my live account trading, I waited for the confirmation of these values, and then I injected the trade and went to bed. Okay, so the moment the trade started, there was some retracement, but the moment the trade developed, even for example in this area, there was euro dollar retracing even more. But let's put a different color and let's see what was going on around this area. So let's say that around this area I was long in Euro USD, and if I would have traded only USD, I would have had a quite significant drawdown. Okay, at the same moment, let's see what was going on in the USD yen. USD yen was in profit around this area, so they were compensating. Euro CAD was in buy, was extremely compensating around this area, not maybe here, but then immediately, because this is the area of the euro dollar. And CAD yen, that was in sell in this area, was already quite enough compensating. So instead of putting the stop loss as a method to reduce the risk, as usual in hedging, the risk is reduced and contained because we choose to hedge simultaneously currencies that have this this condition. Okay, and we don't trade, we don't make 1,000 trades. We just use the logic, and you know, an approach can be that we may split the size of our trades in multiple price levels, so that we also can take a bit of profit and other let them go. But the logic is always this, you know, too weak, too weakest against too strongest. So we have four 4 trades to control, and if there's something wrong that happen, or that we maybe see that the values are completely changing over day, we can take action very easily without, you know, becoming crazy or what else. When do I decide to enter the trades? So it's secondary to the fact that, first of all, I have to analyze the market and understand on which currencies I have to focus. First of all, this is the first step. Okay. The second step is that when I do get out of a trade, and this is because I received emails asking about these topics. There can be one condition when weak and strong are different from the ones that I started. They are completely others. Let's say that if it would have been weakest New Zealand dollar as it was, and let's say that US dollar would have overcome or euro would have become weak, in this case I should have stopped the trade, because all the formula, this is a formulation, is, as I remind you, A plus B plus C plus D measure of 0. Okay, so when the elements, the factors of this formula are changing, I can expect that this can go also negative. So this is the condition on when I decide to close my trades. Okay. And then another condition is that we are at the end of the markets, like Friday, or we are at the end of the month. So end of the week, end of the month. This is an extra condition that I force myself to apply in order to consolidate my profit. Otherwise, I have to develop a methodology that can read even a bigger scenario. That it's possible, but nowadays with algorithmic trading and high frequency trading, and the institutions and the central banks that are making their dirty games, I don't know, I am too little to have this very long sight. What I can do is that I can choose the currencies that better perform that day or week. This is already enough for providing me an income, correct? So, just to be fair, showing you that even if in a situation of quite the only moment of retracement of euro dollar at this price level, USD was USD yen was providing me a profit. Euro CAD was also a bit down, but then immediately in a high profit, and CAD yen in profit were 3 in positive and just euro dollar in negative. That was the only moment, but for the rest there was this situation of 4 on 4 positive, and we have 100 pips here, 150 pips here, 50 and 67 pips of total, which also, if we can also tell that this is the result. Okay, so well, just for ending, as usual, as I am used normally to do this every time, to provide you also the statement of what I did. Let's make a final report. Oh, sorry, this is, of course, this is the, see, they are still running, I didn't close the trades. Okay, so that was the snapshot that I took half an hour ago, and we already made an extra 400 euros profit. Okay, so now I will close the trade and make a final detail report. Only 8 trades, 100% long positions, short positions, take all the time for reading the values and the stats. And this was the line of profit of that formula: A plus B plus C plus D, major of 0, that you can also appreciate in the webinar that I strongly suggest you to visit and study, because on that I put a lot of knowledge and theory about what my studies were in regards to the Forex market and Forex market exclusively. With this ending of the week and a very nice result, I thank you for watching, supporting and subscribing. For those who are constantly keeping in contact with me and providing me observations and questions that are also useful for myself for improving my knowledge and focusing on the things that I'm still missing when I want to analyze the markets profitably. So thank you everybody, and as usual I wish you a good weekend, good time and good space. Bye.